Good afternoon, everybody. It's my very great pleasure to introduce our keynote speaker for this afternoon, Professor Christoph Weber. He's Chair of Management Sciences and Energy Economics at the University of Duisburg-Essen. One of the themes of this conference has been to understand the lessons from various jurisdictions at the nexus of markets and the environment. Christoph is going to share with us various insights and, I should say, correct pronunciation of Energiewende.
Thanks, Ross, for this kind introduction and for pronouncing Energiewende almost like a German would do. I got a number of questions already up front of this conference on what apparently Americans intrigues about the Energiewende. You might translate it by energy transition or energy system transformation. And so I took up one into the title of this talk, which is whether we are doing in Germany following a long-term vision irrespective of cost. Obviously, that's not the only point I want to talk, and I apologize. I'm a German professor, and the slides that I've prepared are certainly not suitable for a dinner speech and probably not even for a lunch speech. There are not enough graphs in there. It's more like a lecture for my students, and it includes also an overview slide of what I'm going to show you. But hopefully there are some points which are of interest of you, despite many points have already been touched upon during yesterday's panel discussions. So I want to talk first briefly about key developments that we have seen in the field of the transformation of the energy system and the expansion of renewables. I think if you then try to understand what the current situation of German utilities, you have to be aware that the Energiewende has not been the sole and only thing ongoing in Germany and in Europe. And therefore, I want to briefly also touch upon other important developments, and then come to one point I was specifically asked, what are the implications for the German utilities as we see them as today? And finally, I want to highlight some issues that I see being essential for the next years and decades to come. Okay, so just to put it into the general context, one might argue that the Energiewende started in 1980 and not in 2011, as even in Germany the popular belief is. Already in 1980, we had a book with the title Energiewende, and at that time the focus was not on climate change, it was on growth and wealth without oil and nuclear. And it was issued by a then new think tank, the Öko-Institut, who was just establishing themselves as an environmental think tank and as a kind of alternative line of thinking compared to conventional energy system analysis. Since then, a lot of things have happened, and already in 1990, under a conservative liberal coalition government, we had the first feed-in tariff for renewables introduced. It was the first German environmental minister, Klaus Töpfer, who was leading that movement, and so it has a long tradition in Germany, and also the opposition against nuclear has a long tradition in Germany. What is not on the slide is that, in fact, the 2011 decision after Fukushima to phase out nuclear was the phase out of the phase out of a phase out. So there was a first phase out decision taken by the Green Social Democratic government in 2000, which was then reversed in 2010. And at that time, the then conservative liberal government led by Angela Merkel tried to develop a consistent overarching energy concept with as focal year 2050, and what has been already discussed in both academia and also the energy business community 2050 as the year where the energy transformation should be completed, and Germany should have some kind of sustainable energy system. And sustainable energy system in Germany, before all, means a system with considerably lower greenhouse gas emissions. So the focus of the German debate about transformation of the energy system since more than 2 decades has been on lowering greenhouse gas emissions. We have had in place in the mid-80s already quite some regulations for control of conventional pollutants like SOxes and NOxes, where the British only have moved to now in 2015. Germany basically has invested into desulfurization and denox already by the year 1990. Okay, then the key points of the 2010 energy concept was the greenhouse gas emission reduction, and it was set as an instrumental objective to have 80% or more renewables in electricity generation by 2050, and at the same time to ease the transition to extend the nuclear plant utilization time until 2036. And so, in fact, this was already in place in 2011 when the Fukushima events happened. It was 3 weeks before a state election in Baden-Württemberg, and that was certainly not the only reason, but it was certainly also one reason why Angela Merkel and her government decided to immediately shut down 8 nuclear power plants and to revise the plan for the shutdown of the further plants, so that now we are back to the final date of 2022 for the closure of the last nuclear plant in Germany, which was already envisaged by the previous government in 2000. Yeah, and in parallel, we have seen, and I will come back to that, a development of the renewables and the constant evolution of the renewable in-feed legislation. And in 2014, the share of renewables in power generation for the first time exceeded 25%. So compared to 80%, this means that still the double of the way that we have done so far remains to be done. So this is the development chart we have already seen yesterday. We started by about 3% of electricity consumption back in 1990. By the year 2000, we had roughly doubled the input from renewables, and then it was the green social democratic coalition which introduced the new energy support law, the AEG, Erneuerbare Energiengesetz, and this has then led to a continuous increase in the in-feed from renewables. But when you take a closer look, you see that over time the contribution of the different sources has changed. So up to 2008, the contribution of PV was really marginal, and then suddenly it exploded, and it was the fastest growing renewable technology until 2012. Yeah, and in parallel with that development, also the costs exploded. So we see here, this is the cumulated payments under the feed-in tariffs. As we learned yesterday, there are more than 30 different feed-in tariffs, differentiated by technology, class, size, and location partly. And you see until 2009, there was an increase in the payments, and also the difference between the payments and the market value of the generated electricity increased, but these increases were quite moderate. So here we were talking about the total volume of roughly 5 billion euro annual subsidies to the renewables. Now we are talking about 15 billion. And that was mainly the development during these 3 years between 2009 and 2012. I would label that the perfect storm for the policy mix that was in place in Germany at that time and continues with some modifications to be still in place. It was the economic and financial crisis of 2008-2009, which has had multiple consequences, with together made all the previous expectations concerning the cost of the renewable feed-in tariffs obsolete. So the first consequence obviously was the economic recession, and then followed by extremely low interest rates. Extremely low interest rates mean that comparatively a fixed feed-in tariff looks much more attractive to an investor who has the alternative to invest either in shares, which the Germans don't like, or invest in government bills. So if you get only 1% or less from your government bonds, compared to 3% from a PV installed on your rooftop, that makes things much more attractive. That was one effect. The other effect was the demand for electricity declined. The CO2 certificate prices were depressed. And obviously, at a global scale, the costs for the PV systems dramatically were reduced. And so the investment became much more attractive, and because the remuneration level did not adapt rapidly to these changing circumstances. So these were the main factors contributing to this huge investment into PV systems and the corresponding increase in renewable subsidies. So to my understanding, the major flaw in the German policy design, you may argue that making feed-in tariffs in itself is a flaw, but if you accept that there are some advantages to feed-in tariffs, then we'll still say making a feed-in tariff without any quantity limitations, without any adaptation mechanism which adapts the remuneration level to the number of installation, that was the major default. So this graph illustrates the point. Here we have the interest rates in red. In green, that's the electricity forward price, and in blue, it's the CO2 price. So we had the historical peak in 2008, and then the rapid collapse, as with other commodities, until beginning of 2009. At the same time, collapse of the interest rates and the opposite movement for the installation of new home, especially home PV systems, but also larger scale PV installations. So they remained at very high level until end of 2012, and there were several modifications of the renewable support mechanism put into place, and the last one in 2012 then already established a direct link between the installations of this year and the height of the feed-in tariff of the next month. So it's really a short-term feedback mechanism. The higher the installations, the lower the feed-in tariff for the next round of installation. It's adjusted, the feed-in tariff varies monthly, and every quarter of a year it is recalculated how much it will decline or perhaps also move upwards depending on the most recent number of installations. Okay, so that's about what we have seen so far. But it's not the full story, since in parallel we had the introduction of competitive markets for electricity and gas. This was development driven by the European Union. Germany by its own probably would not have gone for fully competitive markets. But when it was obliged to, at least for electricity, they decided to open up 100% of both retail and wholesale market to competition in 1998. As a difference to American distance, we don't have an ISO, but each owner of a transmission grid and distribution grid has to, that was at least the wording in the beginning of the competitive area, has to grant access to his grid on a non-discriminatory basis. So in the beginning, we had the incumbents who were owners of grid and generation and also retail contracts, but they were obliged to allow everybody to use their grid to access customers and make new contracts. So there has been, at the same time, a start of competition at the retail level and at the wholesale level. It is not mandatory to bid into the power exchange. And if you are an integrated utility who has both generation assets and supply contracts with customers, then you will typically only sell a fraction of your generation to the power exchange and use the rest internally. But still, the power exchange provides a price signal for all market participants. Over the years, we have seen reinforcement of the rules on unbundling, especially of the transmission grid, which has led 2 of the 4 major incumbents to completely sell off their grids. So now we have, and a third one has sold off 75% of its shares in the transmission system, or transmission grid. I should perhaps not call it a transmission system operator. So that was in the period 2005 to 2011. The large utilities decided it was more profitable to focus on generation, and anyhow, the rules put into place were quite restrictive on combined ownership, so they decided it was better business to sell transmission off. Another parallel development was that we started with the German wholesale market, and then successively it was more and more integrated with neighboring countries. Now we have reached a state where we do intraday trading with France, and we have a fully coupled day-ahead market from Norway down to Portugal. Eastern Europe is still a bit more complicated, but in principle 70% of EU electricity markets are coupled day-ahead, and they use a combined pricing mechanism called market coupling to achieve a convergence of prices day-ahead. And not only convergence of prices, but best possible use of transmission capacities, which still remain limited. And it's not only that trading has been improved, or trading arrangements, it's also that the interconnection capacities have been increased because the TSOs, especially the fully unbundled TSOs, then saw the possibility to enlarge their asset base and provide more revenues to their owners by building new lines. Yeah, so we have an increased competition at the European scale, and this has also contributed to increase the effective capacity margin. Directly observable in Germany, it remains the same capacity margin, but effectively, since peak load is not fully coinciding between Germany, France, Italy, Spain, etc., it increases the capacity margin. Second important development, which came later than the German feed-in tariffs, but has the same objective, is the European emission trading system. The first trading period started in 2005, and it was meant to be part of the Kyoto Protocol, and that especially meant also that there was a linking directive established which allowed utilities and other stakeholders to invest into emission abatement in countries outside the European Union and to receive certificates under the so-called clean development mechanism, certificates that they could use in the European trading system. And as we have already seen on the slide before, this has led to strongly fluctuating prices, and well, there are several causes for the current low prices. As I understand it, the most important reasons for the low price level is oversupply resulting from those CDM certificates and the cumulative effect of the recession and the lower than earlier expected growth rates. We had this discussion in the morning between a cap and trade and a rate-based system. A cap and trade system like established in the European Union, when you have lower economic growth, your emission constraint is less binding, and this will make your emission price collapse. A further uncertainty was then certainly also how the EU would continue with that emission trading system. Hopefully, the negotiations by the end of this year in Paris will lead to at least some substance in the international agreement. That will certainly make the European Union easier to continue its ambitious climate change mitigation program. Yeah, and so the ETS is in place. It works. It sends price signals, although not those that were expected. But it had also some construction flaws, especially until 2012. There were free allocation of certificates to existing plants if they continued their operation. That means it is a clear incentive not to shut down your plant, because then you would lose your certificates. And even the German government, the now Minister of Economy, Sigmar Gabriel, was at that time the environmental minister, and he tried to make the best for the German conventional energy suppliers by promising them that if they would build new, more efficient power plants, they would get full free certificates for 14 years of operation, whether it is a hard coal, lignite, or gas-fired plant. That obviously provides an incentive to invest into emission-heavy installations. That regulation was then overthrown by Brussels. They said, no, that's not consistent with our principles. But at that time, many of the large players inside and outside Germany had made their plans to invest into new coal-fired units inside Germany. Yeah, and that were the consequences. We went from boom to bust. And we don't recover that easily from that bust period, as you do in Texas in an environment where demand is still growing. So to put it in the terms of a screenplay, we had a prologue of tranquility, and some of the elderly utility people still have sweet memories of the old good times when there was a monopoly in place. Then until 2005, nobody was really sure how things would unfold, and especially the emission trading system was announced but not put into place. Nobody knew what the emission prices would look like, so nobody wanted to invest. They rather focused on cutting costs, making their companies fit for the starting competition. I know many of my former colleagues, when I was a PhD student, they went then into the industry, and some of them came to the US and learned from US traders how energy trading would work out. So that was before the Enron collapse, obviously. So more than one was also in Houston. Okay, so and then they told me stories how they managed to be better traders than the Americans who were, for example, not aware of public holidays in Germany and other. Yeah, so and there was also, what is not mentioned here, a number of mergers. For example, the German energy giant E.ON was formed in this period. And also RWE got larger in that period, and Vattenfall entered the German market, taking shares in 3 formerly independent companies. Yeah, once the emission trading system was put into place, and it was in general faced with high commodity prices, good growth prospects, at least as perceived by utility people, they felt also pressed by capital markets to invest all the money they got, and their revenues were boosted by the free certificate allocation on existing plants. So in that period, many made plans for new installations, and afterwards they realized that the world did not evolve as they had expected. That started obviously in 2009 with the recession, where electricity demand in Germany declined by 5%, but it was even stronger from 2011 on, when the market coupling took full effect, and it became also clear that the German government was really serious about going for renewables. So what's to come next? It remains to be seen. Before looking what may happen next, just a small update on who is involved. In Germany, we have the big 4, already mentioned, E.ON, RWE, Vattenfall, and the bit more regional company EnBW. They used to stand for 80% of conventional generation. Besides that, we have a very diverse municipal and regional utility spectrum, very diverse also in itself in size. We have some companies who have just 20 employees and serving 10,000 customers, and we have others which have up to 1 million of customers. And those also tend to have a number of generation assets, especially CHP assets, which traditionally in Germany plays a certain role, not as important as in Denmark, but also roughly 15% of generation. Yeah, then we have the 4 TSOs who were part of those vertically integrated utilities in the past, but now are separated, except EnBW, who still owns their regional transmission system operator. And obviously with the Energiewende and the rise in distributed generation, we had new players entering the market. Especially the farmers have made their business, and some are more energy farmers or harvesters than farmers in other crops. If you have a good piece of land close to the coast, then you can quite earn some money just with putting a windmill on your ground. So, and I think this is really an effect of the renewable feed-in tariff scheme. There are no precise figures available, but roughly more than 50% of all investment into renewable assets has been done by private investors and farmers. And we have project planners who have emerged, who forged the skills to identify the sweet spots for putting on new windmills and new solar installations. And also banks and insurance companies are more and more thinking about going in some investments in the energy sector, especially since interest rates are low elsewhere, and they need to guarantee their revenues. So that's the scene, and that's the major consequence as perceived from the perspective of traditional utilities. Back in 2008, everybody was saying, oh, we have to enter the generation business, and also many municipal utilities thought this is where the margins will be high in the future. We will not earn much on our supply business. So everybody was rushing for generation, and now they find themselves with investments which are more or less stranded. Many in Germany blame the renewables for that. But according to our calculations, and we have worked hard to try to establish what were the expectations back in 2007 when the decisions about new generation were made. We tried to replicate them with a simplified fundamental market model. And that was, well, this is our model price for 2014 given 2007 information. Base price 63 euro. The actual price was 61. And the base price in 2013 for the forward contract, the observed one was 39 and ours was 37. So our simplified model does quite well in replicating what has happened in the markets. Overall, a decrease in the base price level by more than 40%. We decompose then the effects in those 5 categories: changes in load expectations, changes in renewable installations and expectations, changes in conventional capacities, changes in CO2 prices, and changes in fuel. So if we apply these changes separately, we see the largest single impact on the base price comes from lower CO2 prices. We had, back in 2007, expectations of roughly 25 euro per ton of CO2, and now we are at 6 euro. So that's the largest single impact on base price, whereas renewables come only third, after load. We had already in 2007 expectations of roughly 0.5% annual load growth, but now the expectation is 0 load growth, or even shrinking. According to the energy concept of the Bundesregierung, we should see minus 1% per year. That is not what we have seen recently, but at least the expectations are considerably lower. So that's impact on base prices, and then we have tried to identify what the traders would call the spread on an hourly basis based on spot prices. I've labeled here the operation margin expressed as annual euro earned per kilowatt of installed capacity. And we see the effects are even more dramatic for all technologies than are the effects on the base price. And this is without taking into account the effects of the improved interconnections between the countries. And yeah, so with CCGT, this was not a new CCGT that we looked here at. It was a mid-merit order CCGT. It almost entirely loses its operation margin, and so the clear consequence is to shut down such a, or at least mothball such a unit. But I want to emphasize this is not only a consequence of the renewable policy. It's a consequence of multiple factors which have worked against the expectations of the actors in the market. But at the same time, obviously, given the clear policy objectives, well, one would say this is bust and then there will be a next boom. But given the policy objectives that conventional generation will make up at most 20% of all generation in 2050, we are not that sure that there will be a next boom. And so the prospects are not really bright. consequences, E.ON splits up. E.ON has taken the decision early this year to separate off their conventional generation business together with their trading business, and E.ON has also overtaken a gas importer and producer, the former Ruhrgas, and also this will be part of this new no-name company, which in fact bundles the old assets of E.ON. And obviously they want to get off major risks by splitting off that company, and they want also to transform their image. They say they want to stand for the clean renewables, for the distribution grid, which is perceived increasingly as important for getting the renewables also connected, and they want to include customer solutions. So that's one strategy, followed by one of the major German companies. The others so far don't follow that move. Vattenfall partly wants to pull out of the German market. RWE and others rather maintain their old business model. They just try to switch the focus and develop especially the renewable portfolio, energy services for customers. RWE has formed new subsidiaries already some years ago for both segments. Investment into distribution grids is a topic, but still it is not to come because the regulator don't want to impose a rollout of smart meter, but rather expects that the market will drive smart meter rollout, and that is not happening and probably will not happen. And obviously everybody is struggling to maintain its financial health. Just as a last example before concluding, to take another player in that game, MVV, it's the utility based in Mannheim. Their claim is energizing the future. They have a traditional business model including quite important district heating, and contrarily to most other municipal utilities, they transformed in a stock-listed company in 1999, and they have also made acquisitions in other municipal utilities. So what they try is to refocus their asset portfolio by investing selectively in biomass waste incineration, both inland and also in European neighboring countries like Poland, wind farms, and in a recent move, they have taken over project developers, because also the project developers have felt the changes in the regulation and not that bright prospects for future wind and solar in Germany. And another subsidiary they have just started to focus to develop. It's a joint venture which goes on demand-side management and energy service solutions. So that's 18 people out of 2,000 people employed at MVV. It's so far more a small startup than a major business field, but apparently they hope that this will do. Okay, so that's the current situation. How will we continue? Version 1, we continue more or less as we have done, but not irrespective of cost. The current economic minister is well aware of that if he lets the costs get out of control, then the whole project of the Energiewende will not succeed. So there has been a reform last year. We have adapted this breathing cap, which was first put into place for solar, now also for wind. And the integration into the wholesale markets is improved. So now everybody is obliged to submit bids for the wholesale market. And the next round of that is imposed by the EU. We will shift from feed-in tariffs to auctioning bidding-based mechanism. And there is a lot of other ongoing discussions, which I suppose here to some extent would be done inside of the ISO because they concern rules in the market and system operation. But here it's a discussion between the regulator, between the TSOs, the generators, etc., and policymakers. Economists like I have a certain preference for route B, get the prices right. That would mean get especially a carbon price, which works effectively as signal in favor of renewables and against strongly CO2 emitting power generators. Because what we now observe is that Germany is likely to miss its 2020 target on CO2 emission reduction. Given the low CO2 price in Europe, the German lignite units and coal units are producing at record high levels. I have made some efforts to show to my German colleagues that this might work, but I am quite skeptical whether it really will work out. What we certainly would need is some price stabilizing mechanism. Things are further complicated by the fact that the power sector is certainly important. It stands for roughly 40% of German emissions, but only 40%. And in other sectors, the efforts for the Energiewende are prove to be even more difficult, especially transport. We have some ambitions concerning electric vehicles. It's far from certain that we will meet the objectives. And for energy efficiency, especially in residential home heating, there are also ambitious goals, but despite subsidy programs, the actual development is lacking behind. Okay, to summarize, clearly I would argue the Energiewende is not progressing irrespective of cost, but to my understanding, going for a low-carbon society is not a free lunch. We are investing into new generation assets for the benefit of the environment and of our children. But as far as I see, at least for Germany, without a CO2 price, they will continue to be more costly than conventional generators. I think what is important is that policymakers are not acting of their own, but they are supported by a strong public desire to cut down carbon emissions, to gain autarky with respect to energy imports, and also to get away from nuclear. And that's a major difference to France and the UK. It is not a source of national strength. It has always been a threat to Germany. And the policy instruments put into place are incoherent, no doubt. Partly this incoherence is inevitable since we have multi-level decision-making, and you are experiencing the same in the US, I think. I believe the most important obstacles for the success of the Energiewende will not be in the power sector, but it will be in the energy efficiency field and in the field of transport. Thank you for your attention.
We have time for a couple of questions.
Robert? Thanks very much for your presentation. I saw on your slide in terms of paths for the future, one thing that you pointed out is the potential for Germany to adopt zonal or nodal electricity prices. And so it's my understanding there's no locational prices there now. And so my question is, to what extent do you think that having a more locational energy price could help mitigate some of the grid costs associated with adding renewables?
It could. I'm in favor of more locational prices. We have quite some debate on that. I would expect, especially in the current situation, we would not that much avoid grid costs, but we would avoid having to pay extra subsidies for gas generators in southern Germany to remain online, because we have a regional imbalance, and since the nuclear shut down, we have a lack of generation in southern Germany, and there are no coal plants because there were no coal mines, and because or there are very little coal plants in southern Germany, and so southern Germany is losing its nuclear, or has lost large parts of its nuclear generation, and is about to lose its gas-fired generation, and this creates problems for grid stability. And introducing price zones would relieve this situation, partly because the gas plants could earn a bit more in southern Germany.
Thank you very much. I always love hearing about the Energiewende. It's always very inspirational to think about long-term energy policy. One of the things that we hear a lot about here is both the losses that are experienced by E.ON and RWE and the restructuring of the companies, but also the euphemistically entitled unscheduled power flows that are affecting Poland or the Czech Republic. And you mentioned a little bit about Eastern Europe, but if you could talk a little bit about that, because we have a hard time understanding just how it works, what some of those relationships are, and that we've all have heard about the challenges in building transmission lines from the north to the south of Germany with the different Länder, and if you could address that transmission planning perspective too, that'd be wonderful. And thank you again for a great talk.
To take first your second question, the transmission planning process, it is or transmission line building will remain a regulated business, and there has been a process put into place with yearly updates of the plans, and there is now some opposition forming in especially one of the southern states, Bavaria. For political reasons, the Bavarians have a certain tendency of trying to make their own things. And in 2011, the then Prime Minister and still Prime Minister was at the forefront of the Energiewende, saying, "Oh, we will do our Bayern completely based on renewables," and now he realizes that the renewable resources are not that much in Bavaria except for PV, and now, well, it's unclear, but public opinion, he's strongly driven by public opinion, which is in general opposed to construction of transmission lines. So how that will sort out remains to be seen. It will certainly go to court anyway. But since 2011, the opposition against new transmission lines has been lower than it was before. Concerning the neighbors, these famous loop flows are indeed affecting both Eastern European and West European neighbors. I think they are partly linked to the market model adopted inside Europe. And there, a move to a complete nodal market model would certainly help. In general, and then there is the political dimension. Poland is rich in coal and dependent on Russian gas imports to 100%, whereas Germany is only relying 30% on Russian gas imports. So Poland, especially, and also Czech Republic, are very reluctant to embrace the energy transformation. And when you look at EU policy, it's in general the Polish and other Eastern Europeans who are against ambitious climate policy targets. And so this is something that cannot be solved since the EU is very much founded on consensus as mode of conflict resolution. So I think we are struggling with that. Operationally, the Polish and their German TSO colleagues are installing phase shifters to get or to limit the impact of those problems. But that is a technical solution, which is certainly not the full economic efficient solution.
Question.
I think we have time for one more question.
Yeah, thank you very much for your presentation. Yeah, you might find it surprising that Texas is remarkably similar in our commitment to renewable energy. Throughout most of your presentation, you focus on your country's objective in reducing greenhouse gases. And in fact, you've deployed every tool in the toolbox to try to do that: markets, carbon pricing, feed-in tariff. But on your last slide, you talk about energy security. And it would seem to me that that is an objective equally important given the price that you pay for natural gas and your supplier being Russia and to a lesser extent the North Sea.
Well, I have faith in markets when it comes to imports of primary goods. I have less faith in markets when it comes to electricity systems and deployment of renewables. And we have the experience in Germany that even in times of Cold War, Russia has always delivered natural gas. And so we have very limited natural resources, and we have 3/4 of our primary energy being imported. Obviously, moving towards renewables can help to shift that balance to some extent, but it's, to my understanding, not the primary mover, or it should not be. In policy, it is sometimes popping up as an important secondary mover.
With that, I'd like to